Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house.
And they know that they not like us. We ain't gon' do it. The only thing that can stop me is me. If you're doing this for the women you losing, do this shit for yourself. I do this shit for myself.
Real man of genius.
Today we salute you, Mr. Daily Profiler Statistician.
Mr. Daily Profiler Statman.
While others guess where the market might go, you crunch the numbers, projecting highs and lows with surgical precision.
The high of day, low of day, you've got them dialed in.
London Open, you've measured it New York over under. You've tested it Asia range. You've logged every tick since 2018.
No lagging indicators for this guy.
Only you can say, based on the last 47 days, there's a 63% chance the high of the day forms before 11 a.m.
Probability never sounded so
open a cold one, because trading isn't luck, it's statistics and a really big spreadsheet.
It's Mr. Daily Profiler Stockman.
Good morning, ladies and gentlemen. Morning, Mickey.
Good morning. How you doing today?
Too good, bro. Too good. How are you?
Did I just hear a Halloween Discord effect? I don't know. Never mind.
That thing's gonna haunt me in my nightmares.
Yeah, right.
Morning, everybody.
What are y'all
What
doing
up,
for Halloween? Type in the chat. What are we doing for Halloween? The markets
Let
will be
us
spooky
know.
enough.
What are you dressing up as, too? If you're dressing up for
Slappy.
Halloween, what are you dressing up as?
Slappy from Goosebumps.
I'm dressing up as a big red bearish candle.
That's spooky.
And then it's gonna have a little tag on it called Firecracker. Morning, everybody. Morning, good morning. Morning, Danny, Scotty, EP, Chitaki. Let us know where you're watching from. Twist with what the heck? Oh, it's probably the restream. I was like, is Twist writing code in the chat? Let's go, Zay. Morning, guys. Good morning. Good morning. Let's get this out there. I put a little poll in the chat. One thing I'd ask you guys to do, kind of a cool little thing. Usually we ask to like the stream. You can like the stream if you guys get value. But one thing we ask today is we're trying to get this out and get realistic trading out to as many people as possible. We do this every day on Twitter. And then on Fridays, we come here and we kind of do it live where we break down our charts, me and Mickey, with using statistics to base around the highest probable trade around market open and to structure the day. And so the only thing we ask from you guys is if you guys know anybody that could value this, if they're struggling with trading, if they're just getting into trading and you don't want them to go down the bullcrap guru rabbit hole, you see somebody that's getting finagled or finessed in the trading world and you know it's bullcrap, I know it's bullcrap, and you want to give them to something that, you know, showcases realistic expectations in trading, just share them the link, say, hey, check out these guys. We love doing this. We have so much fun doing this, and we have a lot of joy seeing a lot of people kind of have some aha moments around what we do. So without further ado, we're going to make this short, sweet, to the point, because we really like doing these analysis streams, kind of keeping them under an hour. So if people want to go back and kind of reference them, it's pretty digestible. So we'll get right into it. So the first thing that I look at every single day, going to the coming to the chart here for NASDAQ, is go to the hourly chart, and I see, are we above or below the statistics, right? And most of the statistics we like to use: midnight open, P12 mid, highs and lows of days, the opening prices 1 through 7, Globex open, all the levels that everybody cares about. We attach a statistic to them, so we know that if price is above or below them, right, and we mean revert, aka we range in the intraday more than we trend, statistically, if we're overextended in a single direction, then we can use this as a reference point to see where price could potentially checkpoint to at some point in the day. And so if I know that price is most likely going to checkpoint or move in some way, shape, or form to this area of statistics at some point in the day, where does that catalyst, where is that potential, right? It doesn't have to. We could go to the moon, make new all-time highs, and pie on my face, I look like an absolute crazy maniac, right? But every single day, the whole point of being a day trader is not about being right. It's not about being perfect. It's not about predicting every single move. It's about following a repeatable and objective process that over time gives you positive expectancy. That is where people in the trading industry miss the forest through the trees. They think that every little wiggle needs an explanation. They think that every little piece of this chart needs to be explained, when sometimes your edge just isn't there and you need to know when to be invalidated. So the first thing that I look at is if, okay, thinking about an if-then statement, if we are going to have some sort of potential mean reversion, where is the catalyst of that mean footprints? Footprints tell me that in a 60-minute chart, okay, an hourly chart, in a 60-minute span of time, somebody, something, some algorithm, whatever the heck you want to call it, was able to take this candle, this hourly candle right here, that was all the way up here at 26,328, and it was able to sell it before it closed all the way down here. And so I take these wicks that hasn't been tapped into, and if we're above these statistics, I want the bearish wicks because that's where the potential bearish catalyst could be. And so I just want to create this little zone here that I call a footprint. And I call it a footprint because that's exactly what it is. It's like if you were to be in a forest and you were lost in a forest and you see a giant elephant footprint, you're not going to be like, there's probably a coyote around here. No, you're going to be like, oh, this is in the shape of a giant elephant. There's probably an elephant around here. These people leave a footprint behind. And so then this is where I can see, okay, if we come into this area and we start rejecting and everything else is following what Mickey and I's analysis is, this is like even better. This is even better context that this is correct. And this is where we could continue to the downside. Then I go down to the 5-minute time frame. And now I want to see the highs and lows of days because statistically with the daily candle, we have a high and low set in 4 major times. Now, Mickey's going to get into the nuances of those highs and lows of days with the really cool tools that we have called the daily profiler. But the 4 generic times is 1800, 3 a.m., market open, market close. So the first thing I look at is, okay, well, what's the current low of day? The current low of day is 1920. That is out of statistic. So I'm going to come down here and I'm going to mark out of statistic low of day. Out of stat low of day. Then we have a high of day at 820. Now, do we typically make the high of day at 820? No, we do not. So then I'm going to come up here and I'm going to say out of stat high of day. And then because the statistics tell us all these objective numbers, right? Like you can see all these probabilities on my chart. You see this level has an 87%. Opening price of the 5 a.m., 82%. This level, 3 a.m., 75%. All these high probable levels, they let us know that this zone on the chart is the potentiality for mean reversion in some way, shape, or form. And then if I know that this is an out of statistic high of day, well, now it's just the process of elimination. Process of elimination tells us that if this is an out of statistic high, we're breaking above the P12, and the P12 is the high and the low between 1800 and 6 a.m. And this gives us live price component number 1, that if we're breaking above the first half of this daily candle, that's pretty bullish. And so if we could be bullish, then where's the next checkpoint for the high of day? The next checkpoint of the high of day would be around market open. This time period right here, 9:30 to 10:30, right here. So in this chunk of time, if we do come up and take out this high and make an in statistic high of day, and then I'm just going to simulate the high and the low of the 1 minute 9:30 to 9:31 candle. If the 9:30 to 9:31 candle comes up here and we do make an in statistic high and we break to the downside, well, what does this do? We have now turned long for New York 1, and statistically we go false more than we go true for New York 1. So if we take this high, we now have another probability stacked to the downside, which will be this low right here. And so then we would have an in statistic high of day breaking to the downside would give me context for extended cash flow shorts towards all of these statistics to the downside. And then the opposite, okay, because we don't get married to a single trade idea. The market is dynamic, so I should be too. And so then I plan for the other side of the coin as well. If we do suck back into P12 high, is Zay here? Okay, emphasis on the if we suck back in. All right, I'm joking. He really likes my suck. It's a really professional term. Market coined it. Don't blame me. Blame the market makers. So if we back into the P12 range and we come down and start mean reverting prior to market open. So if we do this before market open, Zay says continue. Thank you for giving me permission, Zay. So I'm going to continue. If we break to the downside and we start mean reverting to these statistics before market open, well, now, boom, I get to flip-flop. I get to say we are now short New York 1, which would be take this low. We would leave the New York 1 high, and we would have a high probable price that if, okay, take the 930 range, if we open up at somewhere down here, because we have the context of these statistics, at some point, it could be before market open, after market open, but at some point by market close, all these levels have these probabilities attached to them that price is going to visit these levels. So if price visits these levels before market open, then that would mean that market open would be somewhere near the P12 mid. And if market open is at or near the P12 mid and we break to the upside, this would give me context for going long with extended targets for a potential new high of day. And this could just be a higher time frame pullback for a continuation to the upside. And then if we break to the downside and break below market open, we have context that this is an out of statistic high of day. And then this would be where if I were participating in a short, it would only be either cash flow shorts or no trade at all. So we get to use these statistics to tell us when to get into a trade, but also when not to get into a trade. If I know that this is an out of statistic high, we have statistics above price and we break below market open, and there's not even enough meat on the bones for just a simple cash flow move like right here. This tells me, because a lot of people, when they hear the term statistics, that in high hit rates and high probabilities, they're always thinking to win. We do not trade to win. We do not think in terms of every single trade that I'm looking for, this is going to win and where do I place my TP? It's the exact opposite. These statistics allow me to know that if there is probabilities of coming to X or Y, but I can't fit my risk management, I can't fit my target, I can't fit my risk, I can't define my risk in a way that makes sense. These also allow me to say, maybe I just need to hold off on the gas. Maybe I need to be cautious and just not take the trade and let it be obvious, go into the next hour, wait for an 05 box break or whatever. So
money. Midnight retracement TP.
Nice. And so that's my ideas for the day, guys. Just to summarize, my trade ideas would be break to the downside, net into these statistics right here, open up the market open somewhere around P12 mid. And this would be, if we break to the upside, this would qualify for extended cash flow longs if we break above the opening range around here, or if the opening range forms around market open, or if the opening range forms around the high of day and we break below the opening range, it would be extended cash flow shorts or cash flow longs for the continuation. The only trade that I would be cautious / not even look at or be interested in is if we open up the opening range somewhere to the downside here below P12 mid. So that would be 26,166, anywhere around that area. I would not really be interested in a short until it gets way more obvious later in the day. And that's me, Mickey. Over to you.
Let's go. All right. So we're going to start today with the candle signs, right? We're going to start with the daily chart. We got all these crazy little gaps and stuff. And first and foremost, the only major announcement I have to say is make sure you check your chocolate for razors and drugs and marijuana cigarettes, right?
You know, those
All
people love to save money and put them in candy bars.
Like last year, I found a Glock in between two Twix. I mean, I'm just saying, be careful out there. It's crazy. It's Wild West. All right, so we're going to use the candle signs on the daily chart. We obviously see that above NFP Friday, previous month, 50%. We anticipated higher prices for the month. 30% red candles, 60% green candles. Now it's a new month, right? So now we're waiting for the next NFP Friday, whether they do the print or not. I'm still going to use that Friday for my higher time frame system and statistics, right? So moving on, right? We're going to use the last 2 days to give us probabilities of open, high, low, close for today. All right. So we're going to come over here into our candle science software. And I've already done what Wednesday and Thursday has done. I've already put it in here. And then the only selection I've done for today, right, is that we got above previous day open, right? So we've already moved above, right? So with those statistics, right, they can change as we take out open, high, low, close, and do different things, right? We can see that from a daily standpoint, we have 80% probability of being bullish, right? Before I put that we were above, right, it was a 52.48, and then we had a 9% probability of getting above previous day high. But because the day's high made it above yesterday's open, we can select the 19%. And then everything switches, right? Now we get a 50-50 split of if we take out previous day high, we get a 60-40 split of taking out previous day low. We get 80% probability that we're going to close above settlement. Oh, that shouldn't be hard. Or Globex open, right? And then we can see, and I'll just move over to the charts because I put it on my chart, right? We can see in relationship to yesterday, this is wrong now. We need to change this. This is 50-50. Oh, let me go back and double check. If I start giving y'all false statistics, right? So close above today's high. So there's a 70% chance that we close below that. So 70% chance that we close below previous day high. Right, now let's go do previous day low. All right, there's a 90% chance that we close below previous day low. Right, so now this is 90% chance that we close above previous day low. Right. So now we know that there's a 70% chance that we close below previous day high, and we know that there's a 90% chance that we close above, meaning we expect to close somewhere within previous day range. Right? There's an 80% chance that we close above previous day's close, right? So previous day's settlement, right? And then there's a 60% chance that we close above previous day open. So somewhere within yesterday's wick is where it's saying we can expect to go, right? We've studied experience, so there's your probabilities right there, right? So now moving on, right? We know that overnight was, even though it was ranging, it's a very rangy one, which is not like a trend in overnight, right? But we still maintain truth of long, true in London. So Tokyo said we're going to bid. Frankfurt and London said we're going to bid. And now we're starting to bid. So whenever we see that, we know that there's higher probabilities for these overnight probabilities to get hit. Does not mean that we expect a new low of the day. So what I've done, we call this the firecracker, right? So we know that there's a couple areas that we can firecracker down towards, right? P12 high, and we're going to talk about it. Midnight. P12 mid, London OU, Asia OU's already been broken, so we don't count that one. And then way P12 low, and then way down here settlement, right? So there's 4 possible scenarios that we're going to get that we can do. Now we're waiting for us to break out the one side of the 730 to 830 range so we can narrow it down from 4 to 2 possible scenarios. But now we've got to understand that the market, I'm on YouTube on a Friday and I have to war game for it instead of 2, right? Now we started the firecracker, which got us all the way down to P12 high, gave us a wolfing trade up there for the midnight retracement for 0.12. So if you took that trade, great job. All right, so now, right? So now we're going to see what the edges and what the different possibilities are going to be for this. And we're going to start by saying, right, we're going to break out, we're going to do all 4 possible scenarios, right? Let's talk about what they look like. Scenario 1, we'll say we went short first out of this 730 to 830, and then we made it to the other side, right? That's scenario 1. Scenario 2 is that we went short out of here, and we cannot make it to the other side of this 730 to 830 box. That's scenario 2. Scenario 3 would be we went long first, and then we made it to the other side of that 730 to 830 box. And then scenario 4 would be we went long, and by 1130 we cannot go get below this 1130 box. Right? These probabilities will fluctuate based off of that. So let's look at the scenarios. Just knowing what I just taught you, these 4 possible scenarios, which one do we think would support settlement getting filled? There's 2 possible ones that would say like we should turn on targets for settlement.
Put a 1, 2, 3, or 4, and then you guys in the chat put 1, 2, 3, or 4 in the chat.
Let me make this bigger. That's what she said. Sorry, man. This is why I'm never going to be president, because during my conference briefs, I will say shit like that. So just looking at settlement, which one of these 4 possible scenarios supports settlement actually happening? Remember, these all are scenarios going to 11:30. Okay, somebody said 3. Yes, a long pause, right? Which supports settlement being filled. So GS0088. Yep, perfect. And then what other one? A true, right? A short true, right? Because we expect price is just going to melt. And when the short true, when we get into it, will support this high of the day right here, right? So those are the possible ones. So how can we tell, right? How can we utilize live price to tell us which one it's going with? Well, let's draw some things right here. This is going to represent your 9 o'clock box, right? High, mid, low, right? And then we're going to draw another box to represent the 9:30. The 1 minute high to low 9:30 candle, right? So let's say we broke out to the long side and we're expecting a long false, right? Right? Or if we even we broke when we went short, right? We did scenario 3 or 4, right? Or even 1 and 2 is still is irrelevant. We use the same steps the same way, right? So 9:30 opens up and it starts bidding up, right? We're looking for a 4-step reversal. So between 9 and 10 o'clock, we're above 9:30. Well, if we're expecting reversals for these targets to get hit, right, then we're going to have to we're fighting momentum. We're fighting 12-hour momentum, which is up, hourly momentum, 4-hour momentum, 3-hour momentum up, and we're not in the business of, fighting momentum, right, and calling tops and bottoms. We're in the business of we can start taking trades around these areas, but we need more obvious confirmations of that this is not just a wiggle that retraces, but it's actual momentum shifting to the downside, right? So we do 4 steps, right? Step 1 in this case, can we get below 9:30, right? Step 2, can we get below 9 o'clock's 50, right? 50%. So can we get below, we're expecting a reversal. Can we get below 9:30 first? Can we get below 9 o'clock's 50%? That would be 2, right? Step 3, can 10 o'clock take out 9's low? And then step 4, can we put a Q1 high in 10, right? That doesn't mean we can't take trades during this time. That just means we're locking in that as a high of the day once we do this, right? And if you want to learn more about how this all plays out and what Q1 high means, like you have to join the boot camp. You have to freaking work in for 3 months, right? And what trade models to trade with what, you got to put the work in, right? So that's how we're going to make the determination. So if we cannot do these 4 steps, that supports a number 2, which would be a short false and a long true. If we can do these 4 steps, that supports a long false 3 and a 1, a short true, right? So that's how we make that determination in live price. So now let's war game and see what each scenario supports the most, right? So we're gonna come over to our daily profiler, right? We're gonna go long true broken, long true, none, all, and all. And then we're gonna come up to our wargaming tab. We're gonna start looking at number 1, the highest probable price structure. And that's right, we can put statistics on actual market structure now. And we're going to look at the high day, low day, and T12 low, mid, high, and we can even go over at the end and see which one supports, that settlement. That settlement along with 25, 50, 75, and 100% of that settlement goal. We can even put probabilities on Asia fib extensions, right? For now, we're just going to see what signatures can happen that support what. First and foremost, I like to look at all four to see what the current low of the day, high of the day is, right? We can see that the current low of the day is at 1900 at 0.09% off the global X open, and high of the day is 0.47 at 820, right? I want to see, is there any scenarios that support a low day, high day, right? Because when I can identify that I'm in the body of the daily candle and what color the daily candle is, I can just turn my trades to align that, right? So I'm putting the momentum of that daily candle against my back and not trying to fight it, right? I'm not the kind of trader that wants to buy dips and sell rips. My job is to identify as fast as possible to be buying dips and selling rips. Now, there are models like the 930 model that I don't care what the color of the daily candle is. I trade that from 930 to 944 and I'll trade it regardless. The majority of my models that I'm trying to trade throughout the day have to line up with that candle, right? So it's important for me to see, did overnight put a low of the day? So we can see for a long true, right? This supports a low of the day at 1900 from a time and from a price standpoint, right? We can see that majority of the lows of the days for a long true happen between 0.1 to 0.2 early in the Asia session. So we've got that checked. So if we can't get above 930 and we break out long first, and I know that there's a high probability of this low of the day being supported, and I need to just keep firing longs and lining my longs up with whatever kind of daily classification will give me. Right? So like what others support that low of the day? This one supports it, right? And then from a price standpoint, it supports this as well. So a long pause supports it, right? A short true does not support it. But what is a short true does support? The current high of the day. So from a price standpoint, we can see that there is data to support that high of the day that currently exists. And we didn't go exactly. So we went 0.47. So we were 10 basis, 10, 10, 10 a tenth of a percent off of that price standpoint. So maybe, maybe not, right? And then a short pause, right, supports that low of the day that's currently in. So we have majority of our supporting that low of the day. And we have a short true that would support high of the day, right? So now we see that, right? And then now we can start checking out high of the day. This is why once you can identify if the low of the day or the high of the day is in, and then you can align your trades up because like majority of the New York morning session support a higher day to be put in or the end of day gets put in, right? We can see that price will tell us clear as day if it's going to be a long true because we're going to bid above the 930 and not come back, right? For a long true. For long pause, we can spike up, make a new high of the day, go into previous day footprint or the 50% of the wick, and then reject it, right? And then we have data to support because the range was so tight overnight. We have data support that this low of the day might not be the low of the day because of how price played out, and we should be expecting the low of the day later in the RTH. So we can see for a short true, we start selling at 7:45, 8:15, 8:30, and we just keep going, and then we go into late morning range, right? And then for a short pause, it looks more rangy from 9:45 to 11:30. No matter if we choose the red pill or the green pill, we just sit there in range for most of the morning. We put a new low of the day in and then range, right? We bounce off of London OU and we range, right? So we know we have that going for us. Well, you guys don't want to see that. All right, so now this comes back. Now we have to, because we still have not broken out either side. So let's go see if we are expecting the firecracker that overnight trend gives us. Let's go see what the probabilities of us hitting this London OU and this P12 mid is going to be, right, for each variable, right? So we can see right here for a long true, right, there's a 76% probability of the mid hitting. However, when we look at it from a time perspective, we know that that mid needs to be hit pre-market, and because there's no data besides after 12 that show that P12 mid gets hit. Since that is above London OU, we get a long true scenario. We're expecting that to happen. Like that, we're not going to even make it back to that P12 mid area. So we're going to do the same thing with a long cross, right? We can see that there's a 96% probability, and majority of the time it gets hit between 9:30 and 10 o'clock, right? So we can expect, like in this case, if we get a long cross at a New York 1, right, then we're definitely expecting, like, we're going to see, does it blow through that? Because 3-hour price structure tells us that we should 10 o'clock should take out 9 o'clock's low, 11 o'clock should take out 9 o'clock, 10 o'clock's low, and we should just head downward, right? So that means we should be blowing through it, and we should not be taking bids off of it, right? It looks like this might be a short fall scenario, but we don't front run systems, so we plan for all 4 scenarios until we go short. And we're about to look at the shorts anyway. So for a short true, we can see there's a 98% probability that P12 and that P92, the London mid, will get hit, right? And the highest probability is 9:30, right? We can also see if we get that short true, that P12 low has a high probability of getting hit between 9:30 and 10, meaning that we just blow right through this and we continue blowing right through this, right? We might bounce on we might do a little wiggle on the 1 minute or the 5-minute chart, but on the 15 and the hourly charts, like we're just going to blow right through this, right? And continue heading low for the next 3 hours, right? And then for a short pause, right, which happens 39% of the days, where a short true only happens 18% of the time, long pause happens 33%, and a long true happens 8%. For a short pause, we can see that there's a 66% probability of that low and an 87 of that London mid, meaning that we should be able to expect to be able to buy off of this, right? Because we can see this comes down and then bids, even though it's ranging from 10 to 11, right? Quarters, if red pill, quarters are being respected. Green pill, we just sit there and just respect all quarters until 11:30, right? We just do a range. So that's telling us that 2 of the possible scenarios, or one of the possible scenarios, which would be a short pause, support us buying this right here, and then placing our risk around Globex low. So now we're going to look at these time-based probabilities. So we do a couple of different probabilities. We do session-based probabilities, that's the London OU. We do time-based, which is Globex midnight settlement. We do structure-based, which is high, low, mid of previous day and previous 12-hour. And then we do projection-based, which is the fib extensions that we use in Asia, right? All right, so, all right, let's see what that looks like, just as is, right? We're going to come over here. We're going to go to our levels, right? And all I want to do, and this is probabilities for 8 to 12, right? We can see that P12 low does have a 73% probability of getting a hit. It's not 80 or 90, but 73 is pretty wealthy, right? Especially when you have majority of the time, that 73% of the time get hit, being between 9:30 and 10, right? So that's without even incorporating any variables in New York 1. Right, so we're going to be a lot less cautious unless we get a strong 945 reversal or 930 reversal around this London OU and P12 mid area. We're going to be a lot, if it just comes here and lackadaisical and doesn't do a strong, I sat on a thumbtack bounce, like we're going to be aware that maybe this is not the ideal place to take longs from, right? We can come over here and we can start looking at settlement. Today has a 65% probability, and that Globex has a 70%. Midnight open, which I believe has already been hit. Nope, not yet. Midnight open has an 84. Right? These are all higher than normal probabilities for these Globex opens and midnights. The one thing that stands out to me today is that midnight has the mode and the median closer to 9:30 than 8 o'clock. So most of us already took the midnight trade. We only target 0.12 basis points, but we also knew that we were extended over it, and that this might be one of those trades where we have to either dollar cost average into the position at 9:30, going a 9:30, 9:45 reversal to bring it on down, or just wait for the the 9:30 sell and target midnight open. All right, and then with that being said, like let's go to what settlement looks like on a Friday under these conditions. We can see that there's an 80% probability of a gap fill, right? There's high probabilities of 25% of the gap fill, 50% of the gap fill, and 75% of the gap fill. This supports the short true approach, especially when we break out of that 7:30 to 8:30 range short first. We're going to be super cautious, and we're going to require the 4-step reversal. I'm going to require either a 9:45 reversal or the 4-step reversal to engage with longs once we start selling, right? Because I know that even though settlements all the way down here, there is high probability of that happening, right? And there's also high probability of this P12 low, even though it's 72%, that's a lot more than what it usually is. It's usually around between 50 and 60, right? So those are the two stats that had me cautious to take bids. So I will say 9:30 to 9:44, I'll take that trade as I usually always do that I teach in the boot camp. But then trades outside of that need to line up from the 05 box and the quarters approach after 10. And if we're around here, like I want to see them line up within the first, us hitting this within the first 15 minutes of that hour, then it's that low end, and then I'll bid it up for the short loss. If we're here at 10 o'clock, same concept, right? Like, can we bid it up? Can we just put it instat low end around this area and then break out to the 05 box and start doing the 4-step reversal, right? Then I'll start bidding it up. If we can't do that, then I'll continue taking sells off of the 10 o'clock 05 or the 9:30 to target settlement. Now, what that looks like for me is unless it's gap and back tested one of my trend models, right? I will not sit there and trend trade. I will just take cash flow targets on the way down here. And then when cap and back test one of my sell trend models kicks off, right, I'll enter it and then I'll let it do what it's designed to do. After that 25 to 50 basis points, and we get back down to settlement, we do. So this is kind of a hard day, but not really, right? Right? If we bounce off of here, right, and support this low of the day that 3 of the 4 scenarios does support, right, then cool. Like I know to bid the market up the rest of the day. If we come at 9:30, we can't get back above 9:30, then we obviously know that we're going for this settlement, right? And that this is the high of the day because this high of the day is supported by a short true, and I should just expect a red candle day, and sells are in the body of the daily candle red, right? But that's how I'm looking at this morning. A lot of information, but that's why we take 3 months to kind of teach you guys the risk profile and how to properly position size, how to turn on trades and turn off trades based off of the market environment, how to extend TPs and all that. What do you got? That's what I got, Austin. What about you?
Yes, sir. I just answered Ami, if that's how you say your name. I just answered Ami in the chat. They said, do you do a simple beginner introduction boot camp? And absolutely, like everything that Mickey just went over, I went over. You guys go from how to just literally understand the basics, and then we build on it and build on it and build on it and build on it. Just like how you join the military, they strip away all your civilian bad habits and they build on it, and they teach you how to walk. And then by the end, you're a certified infantryman, right? So
people that went through the boot camp already or going through the boot camp, like answer in the chat, right? Like,
yeah,
you guys think that, you know, like it started off very confusing, and like when you saw me do it the first time, it was very confusing, and you're like, oh my God, there's no way. But like now, how do you feel?
And while we're answering, I want to see a good chunk of you guys answer that, because I really want to see multiple perspectives. And while we're waiting for that, because there's a little bit of latency in YouTube, I'm sharing my screen. I want to freaking shout out, and this actually further answers what Mickey's saying. So we had a boot camp member that just graduated the last cycle, joined the pack, and now look, I'm going to actually, hold on. For the sake of, sometimes people don't like to share this stuff, I'm going to blur that part out, but here we go. Rancho blurred out the dollar figure. We'll keep that inside the pack. But look at this. My first payout. Thank you, Random, for your teachings. Help me to timing my trades. Thank you to building the community. And thank you, Cody, for any trade I take. I will check your concepts. Look at this. This is what we freaking do. We let people build you from the ground up to understand objective processes within the market, and then you apply it to how it makes sense to you. We don't try to force you to trade a singular strategy. We are not a place that teaches you a buy and sell model. We are a place that teaches you processes, objective processes. And Rancho just got his first freaking payout in month 1 of being
That's
out
awesome.
of the boot. So congratulations, Rancho. That's freaking incredible.
And I think that's important to do, right? Like when I built the boot camp, it was like, dude, I know all the trades that I take are behind closed doors, and nobody out there cares about how much money I make or what trades I take. Just like with you guys, nobody really cares if you make money. You, your wife, your ex-wife, and maybe your kids. Right? So I wanted to build this in a way that I could take your aha moments, and we know that there's different market environments. You have ranging, you have trending, you have reversion, you have reversals, right? Knowing which systems to turn on and not turn off at the appropriate time. And then like we all know, and that's the one thing I try to prove over and over again, that the strategy intraday is the least important, because we have back tested almost every type of strategy out there, from ICT to DR to support and resistance to supply and demand to auction theory, right? Almost every single part of it. And guess what? I hate to say it and I hate to break it to you, but majority of intraday trading strategies have a 30 to 60% win rate, right? I can show you plenty of freaking, it's all about when to turn them on and when to turn them off. And are you aligning that strategy with the daily candle and getting the momentum on your side? Because it's all a function of momentum and what momentum is doing. So now, if we know that 90% of strategies out there have a 30 to 60% edge, just standalone, meaning if I mechanically traded them every single time they fired off, right, 30 to 60% win rate, then I know they increase that, and they increase that edge, then it comes down to, number one, am I position sizing correctly? So when it's going through its consecutive loss period, right, I don't blow the account. And then number two, when do I turn this thing on and when do I turn it off? That's more important. And when do I extend my TP? When does it, like, expected value is the most important part, right? Get it? Listen, like we have risk profiles, right? And we have measured moves, right? And aligning those two up, right? A measured move would be like, hey, midnight happened, retracement happens 65% of the time between 8 o'clock and 11 o'clock. Cool, that's a measured move. The risk profile of that is doing a cost allowance and targeting the highest MFB of that 65% of the move, right? And knowing when to turn it. So now we can put an expected value. We've synced measured moves and risk profiles into an expected value. And now we have the ability to say, hey, this has an expected value of this. Now we can grade the expected value based off of how we turn it on and turn it off, right? And that's how you get that. I said 30 to 60% win rate, even though that's the least important thing, but it all ties into that expected value and knowing when to turn it on, off, when to increase position size, when to extend targets. And that's what we teach you, because at the end of the day, I know damn good and well, right? Like a lot of these PDFs, a lot of these market structure courses, right? Like, hey, buy this breaker or sell this breaker or order block this, or, you know, whatever, volume and balance this, or grade the wick that, or any of that, right, has an expected value, right? I know that's not the most important part of the actual trade system, right? And so we try to get you to the point where you know how to do it yourself. We build you a business plan, or you build yourself a business plan. And here's another thing, with all those strategies, they give you the risk profile. I've already debunked a lot of them. They'll say, put your stop above this structure high, put your TP below this structure low, right? Whatever, regardless, right? That's shenanigans, because now, right, if you do a fixed position size, right, and you put it above that structure high, number one, you don't know if that's a statistical correct place to put it, or did they just take the complacent way of instructions? They didn't do the back test on that. because nobody who actually knows the data of their system is just going to use a structure high or low to manage risk, because that risk is going to be different. There's going to be an average MAE or a range median MAE that would support where your stop goes, where your TP goes, right? The reason I know that they chose the lazy wrong over the hard right when they built the risk profile and they sold you a PDF is because I know there's a range through time of where the proper stop is, right? Where that proper MAE is and where that MFE is. And then also know, like, they're expecting you to be a fixed contract trader. So if they say put your stop above this structure point, your stop loss is open now, meaning that you can't get proper expectancy because your dollar lot value changes. That stop value is worth something different every time. Every single time it's worth something different. Today it might be worth $50. Tomorrow it might be worth $200 based off the distance between the entry and that stop. So now we have a huge flaw in the system where it's like, I can't control my business expense. And then, like, that's just, it all leads to disaster, right? So that we try to teach you the proper way of building your systems using data, all the way from the risk profile to the strategy to everything that you do. Because I'm a firm believer in no decision should be decided while you're in the trade. It should have all been predetermined. But that's my little rant for the day, and boom. There you go, Austin. Passing it back to you.
Yeah, I mean, you said one thing that I wanted to kind of highlight, and that's we put probabilities to specific levels. And so one thing you'll hear a lot of people say is like liquidity sweeps, right? Or a high or low sweep. If you're not if you're not in the ICT world, even people in the support and resistance world, they'll call it just a sweep, right? Like a high or low gets swept. If you guys look at my chart, look at exactly what's happening. We are putting a probability, right? There's so many different highs on this chart. There's a high here, there's a high here, there's a high here, there's a high here, there's a high here. There's a lot of previous highs, and just like that, there's also a lot of previous lows. There's a low here, low here, low here, low here. So if I were just to be, saying, okay, well, this run up that we had could be a liquidity sweep of the overnight. And so now I'm going to be just marrying the downside. Well, we're going to pump the brakes. And what we're trying to tell you is, yeah, I mean, anything in this market can happen. We're not trying to predict that we're 100%, because we're not, and we're not predicting. We are having a framework that is rooted in objectivity. And we're saying that, well, hold on here. This high is actually way more important than this high over here, this high over here, because this high is responsible for making an out of statistic high. And so if we don't typically make the high in the daily candle, which is what this high is responsible for, then you may not want to be married that this isn't just not going to be revisited in the same breath that if you were targeting a low, well, this low doesn't really have a lot of significance. This low doesn't have a lot of significance. This low doesn't have a lot of significance. But this low does, because it is an out of statistic low for the daily candle. And so if you have bearish intent, you actually can put up, when you hear people say this is a high probability move. Well, when you ask them, well, where's your data that tells you this? Well, I've just seen it happen. So you don't have data. And
that's recency bias.
You have recency bias. You have, well, I feel like I've seen that a couple times and now I'm going to, every single time this happens. No, we put objective probabilities, something that you can measure. Just like if I were to ask you, give me $20,000 for this real estate property, I promise it's going to make you money. You're not just going to say, well, it sounds like it's going to make me money. You're going to say, show me the numbers. If somebody, and this is the last thing I'll end with, and I want you guys to go off into the weekend, and I want this trading space to be better. And one thing that I think we could do is anytime you hear people tell or try to teach something that is high probability, ask them where the data is. What is the numbers that is deriving this high probability? Because it is impossible. It is an impossible thing. It is completely inaccurate to say that something is high probability if you don't have data. We learned this in first grade when we learned what mean and mode and range and all that stuff was. You can't base a probability off of random stuff. You have to base probability off of a data set that gives you said probability. And so what we're trying to do is show you guys this is a high probability low, not because it's just a low that where liquidity is. It is a low that is responsible for this daily candle to have an out of norm, out of statistic low for that day. Now, does this mean that this can be the low? Absolutely. We could have a low of day at 1920. We could have a low of day at any time. But statistically, we are trying to align ourselves with the highest probable scenario. Just like if I were to ask you, behind door A is a 50-50 shot at being a millionaire, and behind door B is a 50.00001. You would always go for door B, even if it's a decimal of a chance of higher probability that you're going to be a millionaire, because everybody is going to find confidence in the higher probability. It's just how the world works. It's how our brains work. We want to go where the highest probable chance of success lies. And this is what we do. All right, ladies and gentlemen.
Bottom line up front.
Bottom line up. Oh, dang it. There we go. Bottom line up front. Mickey, you go first. I always go first.
All right, give me the string. Give me the string, then. All right, move that meme.
Why is it not hiding? I'm clicking hiding. This is really awkward. I'm clicking hide. It's not getting off the screen.
All right, we'll just do it up. There we go. I was gonna use the chart there. All right, so bottom line up front, we went short, so we're expecting a short false, right? So if we cannot bounce, right, and get above 930, right, then, and whether it's P12 low, London OU, even right here at midnight, right, if we can't bounce off this and we breach this P12 low, and we can't get back above 930, we're expecting short true, red candle. This is the low of the day. But if we bounce, which is a higher probability move, we expect this 1800 to be low of the day, and our job is to bid it up. So break your P12 low, you're selling the ribs. Turning the same false and getting above, you're buying the dips. There you go.
P12 mid and London OU. So for those of you that don't understand the terminology, you can see the prices there on Mickey's chart. 173.50 to 168.25 is the pivot point if we're going to bounce off there that he's looking for bids.
Yep. And if we bridge through it in 930 is always the key anchor that we base all of our decisions around. So if we can't get back above it, we're expecting short true price action. And we go to settlement. And a red day, sell the rips, right? Can't do that. We bounce, buy the dip, green day, 1800 low of the day. Your job is to be a buyer.
Yes, sir. For me, if we come down, take the low of New York 1, so 26,192.50. Okay, so we just wicked it right now. I want to see clean follow through below it. If we break through this low, open up the market at or near this P12 mid, anywhere in this area, which is right along the lines of what Mickey was saying here, anywhere around here, then a break above will qualify an extended cash flow long. Or if we start reverting now and break our way to the upside and break above market open, this will qualify for an extended cash flow long, because this could be what we like to call a one tick wonder, or break to the downside for extended cash flow shorts to these areas. The only move that I will be a complete fraud. I won't understand a single thing after it happens, because it's not obvious, because I can't define my risk and I wouldn't have a good target to put my risk behind. And that would be if we opened up the market somewhere around here and then we broke to the downside for that, exactly what Mickey's saying, that short true. So if we do that short true movement, it's kind of for me anyways, and how I like to trade, it's not something that would probably align with the risk that I want to put on today, which will qualify me to be flat. And
explain why you always identify. Explain, because you do a great job on this. Explain why you personally trade with the winning team and you don't want to lose against the losing team, right? You want to lose against the winning team.
Yeah, so I look at trading like just any other business, and this is my philosophy. I want to disclaimer this, because even people in the pack trade opposite to this, and so I never try to. I don't want anybody to think that my way is the right way or anything. It's just, this is my way of how I find comfortability and peace on the charts, and that's, I want to lose against the winning team. I don't want to take 5 different attempts and get small little paper cuts, because I don't want to just slowly bleed my business expenses. I want my business expenses to count. I don't want to sit and pay for small little trades that I can just be a little bit more patient on And if, as long as I can define my risk and the expectancy is there, that's when I'm going to hit it. And what I mean by that is I'll use exactly what I said. If we do that short true movement, if the market opens somewhere around here, and let's say the market open, because it's been a little bit big lately, let's say the market open is 0.13%. Okay, so then the range would look something like this. If we open up the market somewhere like this, and I don't have any targets, this is red flag number one that, cool, bro, this could be a winning trade, but I'm not trading to win. I'm trading to lose. I'm trying to lose against the winning team. And the winning team, if I come back up to the upside, this isn't me losing against the winning team, because this can be expected. This is the highest probable move. If we take this low, come down to around P12 mid to London OU, and then we false this range for a new high of day. I don't want to put risk behind a trade that I have statistics are slapping me in the face telling me I have a high probability of losing, and I can barely even get 0.1%, which is how I manage risk, the cash flow move. So if I can't fit my target or my risk in an area that makes sense as a business, this is what qualifies me to stay flat. I don't want to pay for that.
Because when you can do the repeatable workflow and you can have 4 possible scenarios and once now 2, you can start thinking about, if this same scenario played out the same way over the next 100 trades or the next quarter, right? Would I be profitable making these decisions over the quarter, or would I be unprofitable? So you now have the ability to see, oh shoot, I might win today, but like over the next 100 times this happens, I'm not going to have a profitable strategy, right? So that's what he's talking about. Losing against the winning team is actually a function of doing the same possible scenario over the next quarter. And what is that? Yeah, you're going to still have consecutive drawdown in red days, but like at the end of the quarter, did the process do the heavy lifting and the risk profile do the heavy lifting to allow you? And it all comes down to, what is the higher probability trade that leads to quarter over quarter success?
Yep. Habits compound, guys, not singular wins. Singular wins do not compound. They just feed your ego, and sometimes they're going to influence you to make bad decisions. Habits, on the other hand, that's what allows you to fail to the level of your systems, because if you do that over the span of 100 trades, that habit with positive EV is going to pay the person, while the person that's sitting here every single day trying to look for a winning trade, that person's still going to be spinning their wheels. I promise you. Mickey and I both see it every single day behind traders. We see it on social media. We see it everywhere. It's
Amir, we absolutely do the same thing for London, right? We just now built a daily profile that's able to look at previous day sessions and put probabilities on London. We have our trader Bowie who does it live.
Yeah, where's Bowie at? Yeah, where's he at, Bowie?
Yeah, so he's the lead trader for London and does it live with you using the daily profile and all that.
Yeah, and actually, we got to call it here because we got 2 minutes left till market open. But Amy, if you go on the YouTube channel, go to the live tab. Bowie does free London live trade sessions just like we do during New York on Mondays, and he's done 2 already on this channel. So go and look, and you can see exactly what he does, aligning what we talk about with the London session. But all right, guys, hope you guys have a wonderful rest of your day. Pack Trade Group Boot Camp members, it is community live trade session. So if you're listening to this right now, go ahead and hop on over to the live session. Share. We're going to have some Pack members sharing their screens. Call Executing Live. This is where we let the community do what Mickey and I do Monday through Thursday. Have a great, great, great rest of your day. Happy Halloween to all the people that celebrate it. Stay grinding on your goals, and never, ever let anybody tell you that you can't do something they never done themselves. And I'll see you guys later. Bye, everybody.
Later, haters.
And they know that they not like us. We ain't gon' do it. The only thing that can stop me is me. If you're doing this for the women.